From the small amounts that you can buy, how does the pricing work? Because I see on apps like Kitco, and it's one of the things people often ask, is that the spot price versus, say, the retail price. Just explain to our viewers how that works.
Okay, I think probably the best analogy is everyone sees the cash rate. So if Glenn Stephen gets up there and says we're at 2.5%, you're not going to get a mortgage for that. So everything has its base, and the spot price is that internationally traded recognisable price. So, but that's for that's interbank trading and the likes and the futures. For us, we're selling the real deal. Okay, so that's then cast into maybe a 1 ounce bar or a 1 kilo bar, and depending on the work that goes into it, there's obviously costs, and then also we need to pay our rent, and so there's a margin basically off that spot price, and some people call it a spread as well, but it just reflects the amount of work that goes into creating that piece of bullion, and also to allow that business that's selling it to survive.
And obviously, if you want to get rid of your gold and silver, you want to sell it, you'll also take it back. And how does that pricing work?
The same basis. So there's a spread above spot for purchasing, and there's a spread just below in terms of buying back. So it's and it basically allows you to recirculate that material.
Fantastic, very good. Now, one of the questions that a lot of other people ask is, if I'm looking for a sort of a long-term investment, is it better to buy 5 grams of gold, or is it better to buy, or with silver, kilo of silver, or is coins? What do you recommend, I guess?
Yeah, look, as I said before, the price reflects the work that goes into a bar. So if you're buying a kilo of gold, the margin on that is a lot less than an ounce of gold. What you then have to consider, though, is then selling it. So we're looking at prices now that could go substantially higher. So how tradable is that going to be? So the bigger the bar you buy now, that's a lot more value that you're going to have to sell. So if you want to be trading down, gradually, the smaller product is probably better. And it gets down to whether you want to buy a bar or a coin. Coins are a little bit more again, so there's a more work in that minting. They come in a plastic case usually, but that margin that you're paying now off silver at maybe 21 bucks, when silver's at 50 or 100, are you really going to care about that $8 margin now? It'll still be $8 on 100, just as it's $8 on 21. So it's horses for courses, but generally I think a mix that allows you to have some smaller stuff that you can trade easily is probably worth considering.
Fantastic. Now, how can we find out about you? Do you have a website? What's your address and phone number? How's the best place to get in contact with you or Ainslie Bullion?
Yeah, sure. We have a physical store, so we're on level 6 of 12 Creek Street in the CBD, so the Blue Tower. So people can literally come in, cash and carry. It's immediate. You can be in and out in a few minutes. Or you can buy on our website, so it's www.ainslieBullion.com.au. It's a full web store there. We have a whole lot of educational material as well, and a whole explanation about how to go about it. Or likewise, you can phone up and call and buy off the phone. So there's 3 options there, all of them very easy. We can mail the product to them, or we can have it ready for collection. We also deliver up to the reserve vault for free, fully insured. So that covers that storage component of the equation. That there's the largest independent vault in Australia sitting right at their doorstep.
Fantastic. Well, thank you very much for joining me on Bullion, and I look forward to our further chats. Thank you.